Ladies and gentlemen, good day and welcome to the Dixon Technologies Q2 FY24 earnings conference call hosted by DAM Capital Advisors Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Bhumika Nair. Thank you and over to you, ma'am.
Yeah, thanks, Enzo. Good evening, everyone. Welcome to the Q2 FY24 earnings call of Dixon Technologies. We have the management today being represented by Mr. Atul Lal, Managing Director and Vice Chairman, and Mr. Saurabh Gupta, Chief Financial Officer. I'll now hand over the call to Mr. Lal, post which we'll open up the floor for Q&A. Over to you, sir.
Thanks very much, Bhumika. Good evening, ladies and gentlemen. This is Atul Lal, and we also have on the call today our CFO, Saurabh Gupta. Good evening, everybody. Thank you very much for joining this earnings call for the quarter ended September 2023. Coming to our overall performance for the second quarter, consolidated revenues for the quarter ended September 30, 2023 was INR 4,943 crores against 387 crores in the same period last year, which is a growth of 28%. Consolidated EBITDA for the quarter was 200 crores against 146 crores in the same period last year, growth of 37%. Consolidated PAT for the quarter was 113 crores against 77 crores in the same period last year, which is growth of 47%. Our team's focused execution in a challenging operating environment helped deliver strong earnings and improvement in operating margins year on year on account of operating leverage, cost optimization, efficiency measures across all businesses. We continue to invest in our capacities and diversify into new product categories to support long-term growth opportunities with huge focus on quality, manufacturing excellence, and consistently meeting the needs of our principal customers and strengthen our position as a key player in the industry. With a strong capital allocation discipline, effective working capital management, and earnings improvement, we were able to expand our ROC and ROE to 32.9% and 24.4% respectively as on 30th September 23, and we feel confident that the same would keep improving in upcoming quarters and years on account of improved earnings, working capital efficiency, higher asset turns in most of the businesses. The strong balance sheet, high liquidity, and enough credit lines from banks enables us to direct growth capital swiftly and enables us to invest in the long-term development of our business for long-term value creation. Our foremost objective continues to be a part of India's long-term growth story and to ride the country's robust consumption narrative and make an India initiative to achieve industry-leading growth. Now I'll share with you the performance and the strategy in each of the segments going forward. Consumer electronics revenues for the quarter were 1,440 crores with an operating profit of 49 crores, that is 3.4% operating margin. Operating profit margin expanded by 50 bips year on year on account of operating leverage, continued focus on backward integration, and increasing share of own design solutions. Revenues for the quarter was 4% lower year on year as it included 79 crores of revenue contribution from AC inverter controller board business, which was subsequently transferred to the JV with Dixon in the current year. Also, the festival calendar shift has led to spillover of some consumer demand from Q2 to Q3 in this fiscal. We have rolled out India's first ODM-based Google TV solutions from Google in the quarter under review, and we are getting a positive response. We have also entered into partnership with Samsung for their Tizen operating system, which will be sub-licensed for us to offer to other domestic brands, and it is expected to be rolled out in Q4 of the current fiscal. We have started injection molding shop for TV and have also invested in LED bar assembly line in line with our continuous focus on backward integration strategy to deepen the level of manufacturing in India. We have also advanced in exploring newer products such as commercial displays used in public advertisements and information displays and interactive boards for use in educational institutes and offices, and have got some initial orders. Lighting. Revenue for the quarter was 181 crores with an operating profit margin of 7%. Apart from sluggish consumer demand and increasing competitive intensity, reasons for lower revenues year-on-year are high reduction in price due to drop in commodity prices and freight rates and migration of LED bulb technology to DOB, that is driver on board, which are priced approximately 30% lower as against the same period last year. Since LED bulbs is the largest category in lighting for us, it has a major impact on revenue growth. We have launched strip and rope lighting in Q2 and have received extremely good response from our customers. We are on track to launch professional products by Q4 of this financial year. New product introduction across all product categories will continue at a rapid pace for the rest of this financial year. We have expanded our export business with new customers coming in Germany and UK. We are expecting to close with some other export customers in the coming quarters. Home appliances. Revenues for the quarter were 364 crores with an operating profit of 42 crores with expansion in operating profit margin to 11.6%, led by passing on impact of commodity cost and exchange rate fluctuations to customer, improved operating leverage and cost optimization measures. In line with the backward integration strategy, we have set up our own tool room for in-house mold manufacturing and already started manufacturing the same for Bosch in semi-automatic categories and Panasonic in fully automatic categories. We have started manufacturing fully automatic washing machine for Voltas Beko, which is a large customer for us in semi-automatic category, and also launching new models for Lloyd, Reliance and Panasonic in FATL category in the current quarter. Mobiles and EMS division. Revenues for the quarter were 2,819 crores, a growth of 77% year-on-year, with operating profit of 93 crores, a growth of 119% year-on-year, with a margin expansion of 60 bips to 3.3%. We have got increased order book from Motorola. One of the recent noteworthy highlights is securing a large order for Jio Bharat phones with an order book of 15 million units. Mass production for same started in September with 1.5 million units already manufactured till date. We have entered into strategic partnership with Nokia and we are manufacturing more than 1 million phones for them per month. We have started manufacturing Xiaomi smartphones in our new 3.2 lakh square feet facility in Noida. We expect the volumes to ramp up to 0.3 million per month in Q4 and then to 0.5 million per month in subsequent months. Such large order wins showcase our reputation as a reliable and the most preferred manufacturing partner in mobile industries. We are further also in discussion with some other large global brands for smartphones. And we are fairly confident of concluding this business in Q4 of this business, this current fiscal. Telecoms and networking products. Revenues in this segment for the quarter was 173 crores. Our new facility in Noida got operation in December 22. It is now stabilized in mass production of Android set-top boxes for Airtel in partnership with the global ODM has commenced. Also manufacturing of HD Zephyr set-top boxes for Airtel will start from current quarter. We've also got a large order from India's largest telecom for internet set-top boxes, which commences by Q3 of this fiscal, and also 5G CP devices, which is expected to start from Q4. We are in active discussion with some large global brands for existing and new product categories and building a strong team for joint R&D with our partners to support our end customers from India. Laptops and tablets. Revenues for this segment was 52 crores. The government has recently announced a revised PLI scheme for IT hardware products with higher incentive payout. They have filed the application under hybrid category and committed investment to 150 crores with much higher revenue and incentive potential. They expect the approval from the government to be coming in shortly. In addition to Acer, whose order book has been increasing monthly, we are in now advanced stages of discussion with some large global brands in this category. Wearables and hearables. Revenue for this segment was 385 crores and healthy operating margins and high ROCE. We clocked strong volumes of TWS for both and have healthy order book for upcoming quarters, and will be adding smartwatches in our product portfolio next couple of months in this vertical. In line with our strategy to deepen the level of manufacturing, the SMT for PCBA will also be done in-house in the current fiscal, and we are also exploring the possibility of starting the manufacturing of battery packs. Security surveillance systems, Dixon's 50% share of revenues for the quarter is 140 crores. Operating profit margins are lower in this business due to under-absorption of the duplicated fixed cost structure both in Tirupati and Kupurthi campuses. We have already expanded the capacity from 10 billion per annum to 14 billion per annum in our new facility in Kupurthi, which has already got operational in the first quarter of 24. Further expansion of capacity in Kupurthi plant is planned in line with the increased order book from our principal customers, which will lead to improved profitability and margin expansion from Q4. Rexxam Dixon Electronics, it's a 40-60 JV with Rexxam of Japan to manufacture inverter controller boards for air conditioner. This JV achieved revenue of 74 crores in Q2 with healthy margins and 100% ROC in this business. We have a strong order book for this JV. We supply to Dixon, and also we are planning to start exports under this business by next fiscal. We have achieved the capex thresholds and revenue thresholds for the current fiscal year under the PLI. Refrigerators, we have created capacity of 1.2 million direct cool refrigerators, which is more than 10% of India's requirement under various product categories of 190 liters to 235 liters with multiple features. Mass production is expected to start by Q4 of the current fiscal. The trials have already started. We will further introduce glass door models and also two-door frost-free in the next financial year. We've got a positive response from both global and national brands in this business. I would like to stop now, and me and Saurabh are there to address your questions. Thank you.
Thank you, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use their handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditya Bhartia from Investec. Please go ahead, sir.
Hi, good evening, sir.
Good evening, Aditya.
So my first question is on the consumer electronics business. Wherein if you could guide us how exactly the order book is looking like, because we are having a delayed Diwali this time around. So what proportion of those seasonal sales are likely to be coming through in third quarter? And within that, while you mentioned a bit about backward integration initiatives, if there's anything more that you can add to it, what's the kind of value addition that overall increases, and what kind of benefit can we see at the bottom line?
So, Aditya, Diwali is around the corner, and a lot is dependent on how the final consumer sale takes place in the next 2 weeks or so. But overall, we feel that in this business, there will be marginal growth in volume on the yearly basis. Last year, we had closed at around 3.4 odd million. If things go right on Diwali, we should close this current fiscal at around 3.6, 3.7. That's the way the number looks as of now. On the backward integration piece, the injection molding plant has already become operational. And in that concerned business, there is an approximately in which we are able to do the injection molding an expansion around 40 to 50 bits. And in the case of LED bar, which is expected to start in a couple of months, there would be another 15 to 20 bits expansion.
Understood, sir. That's great. Moving on to the lighting business, that's a business wherein we have been seeing quite a few challenges, and you spoke about intensifying competition. What exactly has happened over there? Because we did have unparalleled scale. So how is it that competitors have been able to hurt us and gain market share from Dixon, given that their costs are likely to be much higher?
So what has happened in this business was that in Dixon's case, there was large dependence on LED bulbs. Now, LED bulbs, because the whole technology has migrated to DOB, so the unit value has declined by almost 25 to 30%. And second, the overall volumes have also significantly compressed. That is the reason that we have had this hit. These are the two main reasons. As far as the competitive strength is concerned, in these categories, we still maintain that we are most competitive.
Okay. So in terms of market share, are you saying that there is unlikely to be any major loss that we would have suffered in the last 2 years?
So we have grown our numbers, the absolute numbers, in the categories of battens. If you compare last year, in the categories of ceiling lights, downlighters, in the category of LED bulbs, the absolute number has fallen. Partially, we feel it's basically because of decline in the overall market itself. There might be a small loss in the market share, but the main reason for that is the fall in the overall volume.
Understood. That's great, sir. Thank you so much.
Thank you. The next question is from the line of Deepak Krishnan from Kotak Institutional Equities. Please go ahead, sir.
Hi, sir. Thank you for the opportunity and congrats on a good set of numbers. Maybe just on the mobile segment, the sharp sequential acceleration we've seen in this quarter, is it largely all related to domestic demand, or how do you kind of see the outlook going ahead for the full year and the second half as well?
So it is largely due to the domestic demand. Now we are seeing and expecting export volume also to come in from our largest anchor customer in the smartphones. Also in feature phone, in Nokia, we are going to be starting exports. Please appreciate that mobiles is the largest trigger of growth for Dixon. And the large customer acquisitions that we have made in both Xiaomi and ITEL. In ITEL's case, only feature phone has kicked in. The smartphone still has to kick in. And in Xiaomi's case, we have successfully completed a trial, and the commercial production is going to get initiated in next month. And then the ramp up will happen. So the order book looks extremely healthy, and we feel that it will be a significant contributor to our growth and revenues in the coming quarters. We are further in discussions with a couple of very large global brands. We are fairly confident that we should be able to conclude these large businesses in possibly the next quarter. Yeah.
So you would indicate that maybe, 2H still has further legs of room given the healthy order book and, Xiaomi and maybe ITEL's smartphones are yet to quicken. Is that understanding correct?
That's right.
Sure, sir. Those were my questions, and thanks for the opportunity.
Thank you so much. The next question is from the line of Renu Baid from IIFL Securities. Over to you.
Yeah, good evening and congratulations, sir, for the strong results. My first question is on coming back on the mobile segment. While you have mentioned about new customers kicking in, can you also explain, would we require to further invest in new capacities because the recently commissioned plant is largely for Xiaomi? So what is the outlook of CapEx for the mobile segment? And given that large domestic brands are on board for the domestic market, what kind of growth and scalability can we look in this segment or category over the next 2 years?
So, a lot of capex in the mobile business has already been funded. So we have covered what is required to be done. Largely, there would be some additional capex, but largely it has already been executed. On the second part of your question, yes, Xiaomi still has to kick in, which hopefully is going to be a large figure of those, and our other customer that I mentioned is also going to get into the execution mode by Q4. That's what we are aspiring. And then we are working with a couple of other large global brands. If they're able to conclude, and we're fairly confident about it, that should get concluded by next quarter, and it should come in to execution mode by end of next quarter or by beginning of the first quarter in next fiscal.
Any numbers that we can quantify in terms of the scalability of this vertical for us?
We have already shared the numbers of the two accounts that we have already acquired. So that is kind of we're fairly confident about. On the new businesses, it's still slightly premature to share the numbers about.
Got it. Then strategically, if we look at while you've participated within the hybrid category for IT hardware, if you look at the backward integration mandates, it requires quite a bit of capability built up on the PCB space as well as some AT&P activities on various components. So what are the kind of backward integration intensity that we are targeting in the IT hardware PLI 2.0?
So, Renu, right from the day one, we plan to start with the PCB assembly in-house. Further in the roadmap is going to be the localization, and then there are in-house also partnership too, on the power supply side, also on the display module side, and also on the mechanical side. Now, these are three major inputs that we're going to be looking at, but it's still slightly early because one, the IT PLI 2 awards still have to come from the government, and we are in final stages of discussion with another large global brand. Hopefully, that contract should be awarded to us in the forthcoming quarter, because this backward integration plan is finally dependent on the expectations of your end customer, because there are various technology inputs required there and global partnership required. But largely, the backward integration roadmap is what I've just shared with you.
Got it. And last question, if I can, strategically, if we see now with a wide base of customers within the mobile PLI, our positioning within the consumer electronics is very strong. And the business that we have been able to remodel over the years is generating sufficient free cash to not just invest in the current growth, but also look at potential new opportunities. So strategically, are you looking at, from a 4 to 5 year perspective beyond the consumer electronics within the EMS segment, you think there would be other businesses or categories where you would like to explore and look at growth, or Dixon would continue to be a consumer electronics focused B2C play within the EMS market?
No, it's going to be our endeavor, Renu, to look at higher margin categories, to look at the possibility of participating in the component ecosystem opportunity. So definitely, because I think we'll be generating enough cash to build those businesses. And in Dixon, we're definitely going to look at it and jump at the opportunity.
Got it. Thanks much and all the best, sir.
Thank you.
Thank you so much. The next question is from the line of Venkatesh Balasubramaniam from Axis Capital. Please go ahead.
Yeah, thank you for the opportunity. Now, we are embarking on this IT hardware PLI, and we are trying to participate in that. Now, when we observe this, it seems a little different from other categories that we have participated in the past. Because in all other categories, at some point in time, the government did implement import duties. So I believe that helped us compete with manufacturing happening in China or say Southeast Asia. Now, given that IT hardware India as a country under the World Trade Organization cannot put import duties, how would the manufacturing costs in India compare with that in, let's say, China or Southeast Asia? And is the IT PLI, whatever benefit, between whatever 4 to 6% or 7%, is that enough to make up for that cost difference? Or do you think the government needs to give you more incentives to make this a success, like, say, what has happened in mobiles?
So we have done a lot of of groundwork on this particular aspect. The point that you have raised is very, very pertinent. And we are confident of offering the manufacturing charges to our potential customers, which are similar to the global charges. And that's the key. I think we have been able to reach to that level of efficiency. And on that basis, we are confident that we should be able to get the contracts awarded to us. Anything coming through the PLI route, we feel is going to be additional leverage for getting into this business. So I reiterate that the manufacturing charges offered by us are comparable to the global EMSs.
Okay. So is it because we are saving a lot on what exactly? It is on staff costs? Is it labor costs which are much lower here? Like how are we able to compete?
So the efficiency on the lines, the infrastructure that we are trying to build is going to be as efficient, as productive as the global EMSs. Second, this is going to be add-on infrastructure on our mobile infrastructure. So we'll be generating that operating leverage because it will be on a marginal costing basis.
Okay, understood. Now just one last question from my side. When I look at your numbers, the numbers in this quarter have been basically been driven by three, at least the revenues have been driven by three subcategories. One is mobiles with almost 3,600 crores of revenues, hearables and wearables with around 575 crores, and telecom at 275 crores. Is it possible to share what is the kind of indicative targets you have for the current year for these three subcategories?
So I don't want to share the numbers. Yeah, but broadly, Saurabh can separately share with you. But specifically, we don't want to share. We're not in a position to share the numbers.
Okay. Thank you. All the very best.
Thank you.
Thank you so much. The next question is from the line of Abhishek Ghosh from DSP. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. So just a couple of questions. First is, your top line over the next, 2 to 3 years is likely to grow at that, 30% CAGR plus. In that, how should we look at the overall contribution from mobile that should come in over the next 3 years? And also the export piece, if you can just broadly help us understand in your sense.
Yeah, hi Abhishek. So clearly mobile will be the largest trigger for our growth. So if you look at this quarter also, the mobile and EMS has contributed more than 50% of our revenues. And if you look at the opportunities and all the verticals put together, and if you look at the opportunity, mobile is the largest opportunity that we are sitting on, both as an industry, so addressable market, and as for us, where we've significantly acquired all the major large brands that are in discussion with. So my sense is over the next few years, this number potential of revenue contribution coming from mobile can all anywhere between 60 to 70%, because that's where the largest growth is happening. So this, I hope this answers your question. What was the other question you mentioned, Abhishek?
So, and the other piece is?
Yeah, exports. Last year we did 1,000 crores on a top line of around 12,200 odd crores. Hopefully, our export businesses, one will be led by our anchor customer in mobiles, which is Motorola, and also Nokia, which Mr. Raj just mentioned. Lighting, we have initially just started to get some export orders, and hopefully it should keep getting better year on year. We are in discussion with some large chains there. And so my sense is this year, the export revenue can potentially look like somewhere around 2,000 to 2,500 odd crores. So percentage contribution, so suppose last year 10,000 odd crores on a revenue of 12,000 crores, percentage was broadly 8-9%. So this year the percentage goes up, and hopefully this percentage will continue to go up, because the customers, the brands that we are acquiring are initially mostly for domestic markets, but gradually once we execute it well, some of the brands have a potential for global markets as well.
Okay. That's very helpful. Just one other thing, Mr. Lal mentioned the thing that you're also looking at newer clients for the mobile business. If you can help us understand two things. Is it for the export market or the domestic? And if it's for the domestic market, since you already have a fairly dominant player, Xiaomi, as your customer, does it deter you from having some of the other market leader as your customers? Any thoughts on that? Thanks.
So we are discussing with a couple of large global brands. Initially, it's going to be for domestic market, but as Saurabh mentioned, we are hopeful that if we executed well, then the export opportunities will open up for us. Beyond this, to share details at this stage will be premature.
So, got that. And so just one last thing, since you spoke about also you look at newer opportunities in the EMS space, some of the space that we're looking at, they're very different from the way your business model is in terms of working capital, the return on equity. So any thoughts of diversifying into businesses which are capital intensive in terms of working capital and return on capital is much lower than the ones that you enjoy? Any thoughts in terms of diversification into those segments of EMS? Thank you so much.
So, see, Dixon is on a high growth path. On a blended basis, we are extremely focused on the return ratios, on the strength of our balance sheet. But there are certain businesses in which the margin profile can be significantly higher, and also the competitive intensity may not be as intense. So on a blended basis, we feel that our return ratio thesis will never be compromised. But in some of these businesses, it might have an impact. So we feel that now we have the capability and bandwidth to explore those kind of businesses also. So it is today at conceptualization and exploration stage, but we are absolutely committed and serious about it to pursue this.
Got that. Thank you so much for answering my questions and wish you all the best. Thank you so much.
Thank you. The next question is from the line of Sonali Salgaonkar from Jessary, India. Please go ahead, ma'am.
So thank you for the opportunity. So my first question is again an extension of Abhishek's question. Could you quantify the capex that we are expecting in FY24 and if there is any change in FY25 guidance?
So we have done a capex of 331 crores till September. A lot of capex, Sonali, has already been front-ended. We feel that in this fiscal, we're going to close at approximately 500 odd crores. Next year, I think the capex intensity is going to be lower. So that's what we feel. But the next year budgeting is still to be done, and the IT PLI to award still has to happen. And some of the new accounts in mobile are still in advanced stages of discussion. So to give that number is difficult. But for 24 number, we feel that overall number is going to be within 500 crores.
Understand. So my second question is regarding the incentives on PLIs. So could you help us with an update as to how many incentives we have received so far and what's the quantum of that and how are we accounting the same?
Yeah, so Sonali, we are a beneficiary of 5 PLIs. So mobile PLI, we've already received 3 disbursements from the government. And so we are absolutely, I think so we got the checks till December 2022. And our application for the period January to March has already been appraised. What we understand is that we should get the disbursement very soon and in the next couple of weeks or maybe earlier. Then immediately after the September now, so they just close the September numbers, we will now file our claim under the mobile PLI for this financial year as well, based on 6 months numbers. And that should take maybe 1.5 to 2 months to get this disbursement from the government. So this is on mobile PLI. Now on the telecom PLI, again, that appraisal for the period January to March, because that's where we started the business in our JV on the telecom side. So that appraisal also has been done. The final meeting of the empowered committee is pending, which we understand should happen soon, and then we should get a disbursement. And also our investment for the second year under the telecom PLI, which was 36 crores. So first year was 36 crores, and second year was also 36 crores. We have again done that capex because on account of the increased order book that we have from Airtel and Jio. And so that also the claim we will file immediately after this balance sheet closure once we get the first disbursement. So this is the status of telecom PLI. On On the IT hardware PL, we are awaiting the approval under the revised IT hardware scheme. We understand that the approval should come in shortly, and we have applied under the hybrid category with a 250 crore investment because we have a good, so we have some brands and we are in discussion with some large brands there. On the lighting components PLI and on the inverter controller board, where we have a JV with Dixon, again the numbers for capex and revenue thresholds have been achieved. But the PLI mentions that it can only be filed once the financial year ends. So this financial year, once the financial year ends, we have achieved the numbers in the first few months only. What was the ceiling of those committed under the PLI? And once the financial year ends, we'll file the claim, and then hopefully we should get the claim by next year. And then it should be kind of a regular basis, on a regular basis. So this is the status.
Thank you. That was quite detailed, Saurabh. What is the quantity?
Ma'am, Sonali ma'am, I'm really sorry to interrupt you. If you do have further questions, I would request you to please join the queue.
Sure. Thank
you so much. Ladies and gentlemen, in order to ensure that the management will be able to answer questions from all the participants in the conference, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Mr. Mayur Patel from 361 AMC. Please go ahead, sir.
Yeah. First of all, congratulations for a great set of operating numbers, performance.
Thank you very much.
Thank you. Just one question. While the company is gaining, excellent traction in mobile and some of the, new initiatives, new segments, just want to understand for the first half, the EBITDA growth was, impressive at 35%, around 35% year-on-year, but the operating cash flow declined, I think it's around 150 crores. So that's the kind of decline as compared to the first half of the last year. So can you just give some color about, is there any change in the working capital cycle, and is it structural or temporary, or how is it?
So clearly, of course, because of the season every year, Q2 historically also has been a lot of working capital gets deployed because a lot of money gets locked into debtors, which subsequently get realized once the season ends. So one is that. Secondly, a lot of our businesses were also in ramp-up phase. So for example, some of the new accounts that we have started in mobile business for Jio, like in telecom for Airtel, those initially, because those businesses are in a ramp-up stabilization phase, so there's always initial kind of a working capital which gets deployed. But then over the months, what we have seen, and like the way it has worked out in other verticals also, over the period, we always bring it down. So we think that in the next few months, we will be able to bring down the working capital intensity by almost 300 crores. So we'll get almost 300 crores back into the system, which should happen over a period of next 3 to 4 months. We have a plan to it, and we are absolutely working towards it. So hopefully this position as a March 31st balance sheet should look a positive working capital that we should generate in the business, and we should have a free cash flow positive by end of March 31st. So we are absolutely working towards it. We had a positive free cash flow last year as well, and definitely we feel confident that we'll have the same situation this year as well.
So we are absolutely committed to it, and internally we're confident of achieving what Saurabh is just sharing.
Sure. So, is it fair to assume that structurally there is no change in working capital cycle?
No, there's no change in working. Our focus, our commitment on the working capital doesn't change, and you will see that in the March 31st financials.
Sure. Thank you. I'll join the queue. Thank you very much.
Thank you so much. The next question is from the line of Keyur Pandya from ICICI Prudential Life Insurance. Please go ahead.
Thank you, and congratulations to the team for great results. Sir, question is on the mobile segment. So, as you mentioned about Xiaomi ramp-up timeline and Itel as well. So, I think these clients are going to ramp up more in towards the end of the financial year. So, the kind of jump that we have seen in quarter two's revenue in the mobile, are they just a timing difference since they were not there in Q1, then they came up in Q2? Or there is a change in order visibility from existing clients like Xiaomi, Itel, and Motorola. So just clarity on existing client order books, which led to this kind of growth.
in Q2 and also in the coming quarters, the order book of our anchor customer Motorola looks very healthy. And also, there has been a significant volume increase of Nokia. ITEL Feature 4 has already started, and as Saurabh shared, that we have already started executing the Jio order. The smartphones of Xiaomi still has to kick in, which will start from next month, but the ramp-up is going to take some time, and then ITEL. So this is the sequence.
Just one clarification, you mentioned first Xiaomi and then ITEL smartphones. Is it correct?
Yeah, almost parallel, hopefully.
Okay, sure. Thanks a lot. I will get back in the queue and all the best.
Thank you so much. The next question is from the line of Mr. Rahul Gajare from Haitong Securities. Please go ahead.
Yeah. Good evening, gentlemen. Thanks for the opportunity. Now, you did give us the ramp-up plan for Xiaomi. Do you have a similar ramp-up plan ready for ITEL also that you could share?
So we are working on it. We feel that sometime in the next quarter, in the quarter 4, the manufacturing will happen with us.
Okay. So my second question is on the laptop. I mean, this is continuing with the earlier questions around the laptop manufacturing, where you did indicate Dixon will be fairly competitive compared to those manufactured in China or elsewhere. Now, based on your discussion with the potential clients, what is the thought of assembling these laptops? Is this going to be restricted only for Indian market, or even export opportunity is being deliberated at this point in time?
So the discussions that we have had with our global customers is that we feel that we have almost matched their China manufacturing cost. So that's a big positive for this business. Responding specifically to a question for which market we feel to start with is going to be the domestic market only. Because first, in Dixon, we have to prove our credentials of executing this business to our principals. Only then there can be a possibility of looking at exports. But initially, it's going to be confined to the domestic Indian market.
Sure. Thank you very much.
Thank you so much. The next question is from the line of Swati Junjunwala from BOB Capital. Please go ahead.
Yes, thank you for taking my question, sir. Sir, just on the top line side, so currently, given our H1 numbers, we are on track to do somewhere around 17,000 to 18,000 for FY24. Now, given that Xiaomi smartphones are coming up and ITEL and all the others, the laptop PLI and everything is coming up, can we expect to see these numbers double in the next 2 years?
Well, we are extremely buoyant and optimistic about this business. But Swati, to give a specific guidance would be difficult. But yeah, we are extremely optimistic, committed, and excited about this opportunity.
That's okay. Just one more thing, like if there is any kind of guidance that you can give us over the next 2 years, 3 years.
No, we are not giving any guidance anymore. But we are confident that our growth is going to be extremely aggressive.
So Swati, broadly, the comments or the opening speech that we had given, broadly, you can relate that we have a strong order book across most of the verticals. So whether it's telecom, whether it's IT hardware potentially, and then wearables, and also the largest piece, mobiles. So clearly, we will have a very strong growth. We are sitting on a large opportunity, but to share that in numbers, we would like to refrain from that.
All right, that's great. Congratulations on the great set of numbers.
Thank you.
Thank you so much. The next question is from the line of Natasha Jain from Nirmal Bang. Please go ahead.
Thank you, sir, for taking my question, and congratulations on a good set of numbers. So broadly, my questions have been answered. I just have one question on the home.
Ma'am, sorry to interrupt you. Your voice is very low. Could you please speak a little closer to the mic?
Am I audible now?
That is much better.
Yeah, now it's fine.
Yeah. So broadly, my questions have been answered. I just have one question on the home appliance segment. So our channel checks suggest that there has been a broader slowdown in the washing machine segment. So, basis ODM player, can you tell us how the demand or the order book looks like for this particular segment? And secondly, has there been a premiumization that's been happening, or has the orders for, fully automatic front load taking the front seat? Just broader color on that segment will help, sir. Thank you.
So in the first 6 months, our volumes have grown 14% in the semi-automatic category. How the demand is going to pan out, we are waiting again for Diwali, that how the final consumer end sale takes place. Only then we'll have more clarity on our order book and the business plan. We've internally budgeted a number of 1.7 million in semi-automatic against last year's number of 1.4 million. As far as the premiumization is concerned, in semi-automatic, one is seeing that the market and the consumer preference has shifted to the higher-end models. Yeah, that is happening. As far as the fully automatic is concerned, we have just started this business. There has been a 4% growth in the volumes. We are in the process of acquiring more customers, and we'll see a positive traction in the coming 6 months. So that's the way it looks. But how the next 2 quarters are going to pan out, let's wait how the Diwali happens.
Understood, sir. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Pulkit Patni from Goldman Sachs. Please go ahead.
So thanks for taking my questions. So both on mobile and EMS, can you tell me last year, which is FY23, how many mobile phones did you do for each of your customers, the larger customers? For Motorola, for Nokia?
I would like to give you the overall numbers, not customer-wise.
Okay, so last year, what is the total mobile numbers you did, split between feature and smartphone, sir?
So, Pulkit, if it's fine, can I share you after this call? I wouldn't be having it handy right now. What I can give you is the H1 numbers or Q2 numbers in case you are interested. For the full year numbers, maybe I can give you after this call.
Okay, if you can just give me the H1 numbers between feature and smartphones for this year so far, whatever you've done.
Yeah. So for smartphones for H1, excluding Samsung, so Samsung I'll tell you separately. So we did 2.5 million smartphones and almost 12 million feature phones.
Okay.
And for Samsung, we did almost 4.2 million smartphones.
Understood, sir. My second question is, can you talk about what is the total capacity today that you have after setting up factory for Xiaomi and all, both again for smartphones and feature phones? Just the capacity.
So if you leave aside our Samsung plant, our smartphone capacity in the 3 plants is going to be almost 2.5 million of the smartphones and almost 5.5 to 6 million of feature phones.
This is monthly capacity, that's right, yeah.
That's right. Monthly.
Okay. Thank you so much, sir.
Thank you. The next question is from the line of Ashish Shah from JM Financial. Please go ahead.
Yeah, good evening, sir. Can you talk a bit about the refrigerator capacity that we are setting up? By when do we expect that to be up and running? And what is the kind of volume, revenue margin expectations that one should start building in from that business?
So the capacity that has been set up is for 1.2 million units per year. This is basically for DC refrigerator, 190 to 235 liters. At present, the factory has been set up, and the trials are going to be on in next week to 10 days. In the first lot of 2,000 refrigerators, we plan to run the production sometime in second week of November. It requires BE and BS approvals, and also the customer approvals take time. So we plan to start the commercial production. We're targeting December, but that looks to be slightly difficult, but definitely by next quarter. As far as the margin profile is concerned, it's going to be almost similar to our other ODM businesses.
Right. And so in terms of the volume, how the ramp up you would expect? I mean, in terms of whatever kind of insight you may have from the production schedule or any guidance from the customer side, what's the kind of ramp up one should expect from this capacity?
You see, the year one is going to be slightly slow because the approvals in refrigerators, particularly for large global brands to whom we are talking, it takes some time. And I think we are going to miss the season for refrigerators because the season starts picking up from January to March. We're going to be in it, but not absolutely ramped up. So to give exact numbers for the next fiscal, I think we are still in the preparatory stage. It will take some time, please.
Got it. Yeah, that's all from my side. Thank you.
Thank you so much. The next question is from Kuan Chug from Birla Mutual Fund. Please go ahead.
Good evening, and thank you for taking my question. My first question on the home appliance side. You mentioned we've done 14% volume growth in semi-automatic, and mix is also premiumizing. So has the industry seen some sort of price erosion? Because in the first half, revenues have been more or less flat.
Yeah, so there has been some kind of a price erosion because of the fall in commodity prices and also the fall in the freight rates.
Okay, and we pass that on to our customers.
Yeah, the prices are adjusted.
Okay. And the second question is on...
There has been a margin expansion in this business.
The second question is on the mobile phone and EMS side. So now that business accounts for over 50% of overall revenue, and that number would rise as Xiaomi and Itel scales up. But value addition in this segment is significantly lower than other segments that we're doing. So are there any plans to scale up value addition in this segment as well?
So in stage one, the full objective is customer acquisition, executing that business well, ramp up the volumes, and generate an operating leverage because it's going to be a very large scale. Please appreciate that we're talking about a capacity of almost 80-85 million, which is more than 30-35% of the total Indian requirement. That in itself in Dixon is going to consume a lot of bandwidth. Once we are able to stabilize that operations, then the focus is going to be that how we can add more value. But as of now, the whole focus is to gear up the whole organization to execute this large business opportunity.
Okay, all right. That answers all my questions. Thank you for taking my questions, and best of luck for the oncoming festive season.
Thank you so much. The next question is from the line of Srinidhi from HSBC. Please go ahead.
Yeah, hi. Thank you for the opportunity. Just one clarification on the Itel business. The Itel brand, which is owned by Techno, it seems that like they operate 3 brands in India. Just wondering, Dixon has got contract to assemble only the Itel brand or the other 2, which includes
it's going to be for all the brands.
Okay, thank you. And last one, if I may, Saurabh, you elaborated on PLI incentive scheme. Just wondering, just wanted to confirm, is it correct that there is no incentive that has been booked in this quarter as well as like first half of this financial year?
No. Incentive has been booked, so that part got missed. So clearly, the way we do is that we create a receivable from the government based on accrual basis, and we create a payable to the customers on the liability side, which has to be paid, whatever we regulate on a sharing mechanism with them. And the difference between both of them, it gets booked in the P&L. So in the first 6 months of this financial year, 17 crores of PLI incentive, which is our share, across those 2 PLIs, because that's where we have been, across 4 PLIs, because IT hardware is not kicked in, has been booked.
Okay. And may I ask how much is it in Q2?
The Q2
out of the 17 crore.
Yeah, so 17 is H1 and Q2 it's around 11.8.
Okay. Yeah. Thank you for answering my questions and all the very best.
Thank you.
Thank you very much. The next question is from the line of Concall from Sri Investments. Please go ahead.
Hello.
Sir, you're not audible. Could you speak a little louder, please?
Am I audible?
Yes, you're audible now.
Yeah. My question was regarding the business of refrigerator and other things is margin accretive for you as compared to other businesses. So any specific plan to enter into businesses which are high margin category or any specific plan for this business to grow further? That's the first question.
So refrigerator business is just about to take off. It's going to be a large opportunity for us to build up that business. As I shared in my earlier response to the question, it's going to be margin accretive business. Once we are able to stabilize this business, definitely we will look at the opportunity in this particular segment to get into side-by-side and frost-free also. There's going to be the next expansion of this business. Apart from this, any other category, we are very continuously evaluating the opportunities in which the margin profiles are better. We are definitely evaluating the opportunity.
Just to follow up on that, in the AGM, chairman mentioned that you would be looking to enter into categories like automotive, defense in the long term. So what's the plan on that front?
So we are evaluating both, and both in automotive and defense electronics. Some discussions at the initial stages have already started with our potential partners.
So this is at very basic nascent stage, you mean?
That's right.
Okay, just one last question is, you had mentioned that with this IT 2.0 PLI, you would be investing 250 crores and the potential revenue would be 48,000 crores in the next 6 years cumulatively. So just wanted to know, this is even if you get the approval for PLI 2.0 or even if you, by chance, if you don't get the approval, this is still on the target of 48,000 crores in the next 6 years, given the visibility you have with the Acer and the new brand.
No, this is linked to PLI. This is linked to PLI, but we feel confident that we should be a PLI beneficiary. Of course, yeah, the approval is awaited, yeah.
Correct. And in one of the media interaction, you had mentioned that you have been awarded with the client and you will be producing in 4-5 months. But you are mentioning right now that you haven't been awarded yet for the laptop, I'm seeing.
It's almost at the final stages, and we are confident that the contract that has been awarded to us is going to mature.
So we would be expecting the disclosure from your end very shortly, right?
That's right.
Correct. Thank you very much.
Thank you so much. The next question is from the line of Venkatesh Balasubramaniam from Axis Capital. Please go ahead.
Yeah, just a follow-up question. I just noticed that your AC PCB business, which was almost 140 crores last year, has come down this year to something like 40 crores. So why is there a decline in your AC PCB business?
No. So basically, it has not come down to 40 crores. So last year we transferred this business to the JV, joint venture with Dixon. And so that business was transferred towards the end of Q2 last year. So that's why we had these revenues of 140 odd crores. But since the JV is around 60-40 JV, so in the financials we only book our share of minority profit and we don't account the revenues. The 40 crore revenue, I don't know, the 40 crore revenue is a small revenue which is based on some intercompany thing. But apart from that, the revenue is not reflecting in the financials. Our share of minority, which is reflecting in the share of profit as a line item, is reflected in the financials.
Okay. No, I was asking you because in your presentation it is mentioned that if you exclude the AC PCB business, your underlying consumer electronic business is growing at a certain pace. So you can actually back calculate and get. It looks like AC PCB is getting accounted. Maybe I am confused. Anyway.
No. So basically, so there is some confusion there. So basically, the number that we have reported for last year is 1,500 odd crores, out of which we are saying that there was an AC PCB revenue because by that time we had some numbers coming in Dixon only, and that by that time the JV was not created. Last year I'm talking about. So if you exclude the AC PCB revenues, that makes the consumer electronic revenue, which is LED TVs, as around 1,422 odd crores. And if I see the growth this time, the numbers this time, which is 1,440, there is a small growth of 1%, is what we have reflected. And similarly, the operating profit, which is reflecting at 14%, if I exclude the impact of AC PCB, the operating profit growth year on year is 19%.
Okay. Thanks a lot.
Thank you very much. The last question for the day is from the line of Nikhil Agrawal from VT Capital. Please go ahead, sir.
Good evening, sir, and thank you for the opportunity. Sir, just wanted to know your set-top box number revenue for the quarter.
Just give me a minute. So set-top box, broadly, we sold around 6 lakh set-top box, and the average selling price is around 900,000 rupees. So it should be 54, 55 or so.
Okay, and this is included in the mobile segment, right? Mobile and EMS segment.
This is included in the mobile segment.
So, okay, got it. And sorry.
Yeah, mobile and
Hello.
EMS segment. Yeah.
Yes, sorry. And so your TV volumes year on year, if you could just help me with that.
The TV volumes in H1 we have done a volume of 17.9 lakh TVs as against 18.4 lakh in 6 months last year.
Okay. And so what would be the open sell prices year on year?
So open sell prices have gone up. In fact, the way you should look at that, if you look at our revenue growth in consumer electronics, it is almost flat. And if you look at my volume degrowth, it has happened in this particular quarter because the festive season also spilled to quarter 3. So my volume degrowth is -7%, and there is a plus 7% increase in the value in the prices of the selling prices, mainly on account of the open sell. So that's the reason we are having a flat revenue growth.
Okay. So just a clarification, you said 17.9 volumes for H1 FY24.
H1, yeah. But if I talk about specifically quarter 2, it is 10.8 lakhs as against 11.6 lakhs in Q2 last year.
11.8 lakhs.
11.6.
6. Okay, got it. Thank you so much, sir. That's it from me.
Thank you.
Thank you so much. As there are no further questions, I would like to hand the conference over to Ms. Bhumika Nair for the closing comments. Over to you, ma'am.
Yes, I would like to thank the management for giving us an opportunity to host the call and all the participants on the call as well. Thank you very much, sir.
Thank you, Bhumika. Thank you, everybody. Thank you so much.
Thank you so much. On behalf of DAM Capital Advisors Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.